Hello, this is Manesh Patel from ichimokutrade.com. Today is July 27, 2016. In this video, we're going to go for a case study for Apple. The reason why we're going for a case study for Apple today is that Apple had earnings after market yesterday. And what I want to do is I want to show you what Apple looked like on the charts, what bias you would be, whether you'll be bullish or bearish, or you just walk away thinking it's consolidating before the earnings announcement. And what I'm going to do is we're going to show you the charts, and we're going to talk about Elliott Wave, what perspective Elliott Wave would have, what perspective Fibonacci would have, and what Ichimoku would tell you. And then I'll show you a real live trade that we put on based on what Ichimoku had told us. Okay. So let's go through. Before we begin, let's go for a normal disclaimer. This disclaimer basically states this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital Group. It cannot be copied or distributed without our written permission. We are broker neutral since Ichimoku is a public indicator. However, we'll be showing you charts from either TradeStation, eSignal, or Thinkorswim throughout the workshop. Today we're going to focus on Thinkorswim and also eSignal. Here are my contact details. So if you have any questions, you could call us or email us at info@eiicapital.com. Here are also other links of other video tutorials, and also links for our blogs where we're writing about various different instruments and trades around the world. Okay. So let's go straight to the chart. This is basically what the charts look like before the earnings announcement on Apple. This is the daily time frame for Apple, and you could see here what we're doing is we've turned on the advanced get Elliott Wave feature in eSignal, which we have. So eSignal is very good for Elliott Wave analysis. Reason why is it looks at all the sub counts, it counts the ABCs, it looks at multiple time frame analysis and stuff like that. So you could see here from eSignal that basically the Elliott Wave count is that it's a bearish wave, which is basically the 4 wave right now, which is a retail leg. So the retail leg from 4 to 5 is being formed. And if you can't see it, let me draw it out for you. So this is wave 1, wave 2 is from here to here, and then wave 3 is from here to here, and then wave 4 is from here to here. Whoops. From here. Now, so this is the wave 4 that's finished. Now wave 5 is going to be formed. Depending on who you talk to with Elliott Wave and what you've gone through in tutorial, there's different levels on where wave 5 is going to go to. Some people will sit there and say it's going to retest this pivot low, which will be right there. So they're going to target this level. Some people are going to say it's going to sit there and break the 100%. And it'll go lower. Some people have it going to 127%, which will be there. So those people are targeting Apple to go to 82. And then some people will say, well, at least Apple is going to get to not quite the pivot low, but it may fall short. Maybe it'll get to the 78.6 or the 88.6% retracement. And at that point, they're going to be targeting some type of level, probably about to here. My guess would be 92. So if you're an Elliott Wave technician, you're basically recognizing Apple before earnings as being in a bearish wave. It's in the 5th wave being formed, and your target levels are either going to be 92, 90, or about 82. So that's the bias you're going to have going at earnings. So you're going to be looking for trades along that level. If you're a Fibonacci trader, which is pretty much a subset of Elliott Wave, you're going to be coming in here and you're going to be measuring this wave right there. You would have recognized that it pulled back to the 50% retracement. Since it didn't pull back to 61.8, the bearish momentum is very strong. So most Fibonacci traders are at least going to sit there and say it's going to retrace 100% down to this fib level here. So a lot of the Fibonacci traders are basically bearish going into this and saying it's going to get to 90. Okay, so if you're a Fibonacci or Elliott Wave trader, you're basically bearish right here, at least trying to get Apple to 90. And you could see a lot of traders were that way. Reason why is if you look at the option chain last night or yesterday during the day, the volatility on the put side on betting it going down was very high, but the volatility on the call side on betting it going up was around average. Okay, now if you look at this on Ichimoku, price is in the cloud here. So this was bearish. It went for the cloud. It held the top of the cloud here, which is a good sign for bearish momentum here. However, it's still in the cloud here, so it's consolidated. So the question is, will this sit there, pop down below the cloud here and go lower to retest this low based on Ichimoku thought and theories? Well, we've come out with this concept called IMTFs, okay, and that tells us with high probability what's going to happen. So the key thing here is that the support that we have here is the bottom of the cloud and also this green line here, which is the Kijun-sen. So what I'm going to do is I'm going to draw a line here on the Kijun-sen, which is the daily time frame. And then what I'm going to do is I'm going to do an IMTF scenario where I'm going to go to the weekly time frame and see if there's a match. That green line on the daily time frame matches the red line on the weekly time frame. So this is what we call an IMTF support. This is strong. So that was telling us that basically right now Apple has a very, very strong support, so it looks like it's going to hold this level here. So Ichimoku is telling us that the chances of it getting below this cloud was going to be low, but it had a high probability of basically consolidating, where it's going to bounce off the support here, come back to this resistance which it held before, and since it will be coming back there the second time, it will have a high probability of breaking that. Okay, so this was the number one reason why we sat there and we looked at the going bullish on this instrument, whereas Elliott Wave and Fibonacci traders were going bearish. Okay, so if you looked at this here, we basically looked at a bullish call position for this particular instrument. So I'm going to show you our live student account. So in Options University, what we do is we show people how to make money off one contract in order so that they know that they could be successful with one, and then based on your needs and everything, you could add more, just change the quantity to be higher. So yesterday during the market, we sat there and put this Apple position on here. You could see that we did it at close to 11 a.m. Eastern Standard Time. We basically bought the September 105 calls, and we bought it for 58 cents. We had some positions at 54. In this student account, I got it for 58 cents. Okay, and you could see that this was placed yesterday. We went out of the money, and you could see that the stock was at $96, close to $97 a share. So we went a couple of strikes out of the money, and we bought a call since IV was at pretty much at average. It wasn't expensive at all. So we bought it for 58 cents. And we have September, so we have plenty of time here, so we don't have to worry about the time decay. And you could see that the stock right now in pre-market hours is close to 105. So we're very close to being in the money already right now. And you could see for this delta right now is 37, but the delta when we put this position on was $21. And you could see that the gamma here is huge too. So for every dollar increase here, we're going to sit there and get a higher and higher delta. So if this stock opens here at 104, which is the 8-point movement here, and if our delta was $21 a share, then basically we look like we're going to sit there and get about $160 in profit for something that we invested $50 for. So we're looking at a 3-to-1 reward risk ratio or higher, and if we keep this position on, we have a possibility, believe it or not, to get to 8-to-1 reward risk ratio or higher, assuming that the volatility remains the same and assuming that Apple keeps on going higher. But either way, we're on the correct side of this trade due to the IMTF concept with Ichimoku. Okay, and that's one of the reasons why it gives us a huge advantage. This is also the same reason why you could see that I was really, really good at trading Elliott Wave and Fibonacci, but I was still lacking something. And the problem was that with Elliott Wave, you get a good reward risk ratio just like you did with Ichimoku, but you didn't quite get the same win-loss ratio that I got with Ichimoku. And that's one of the reasons why I was always looking for something better to increase my win-loss ratio with Elliott Wave analysis. And that's what we discovered with Ichimoku and the concept of IMTFs. Hope you guys enjoyed this case study. If you have any questions, you're more than welcome to contact us here at any of these office locations or email us there. Have a good day.